This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with their closing grain and livestock comments for February 11th, 2016. Corn market steady to down 1 today. Beans up 10 to 11. Wheat steady to mixed. Minneapolis the stronger of the three. Feeder cattle down 147. Live cattle down anywhere from 2 to 230. And hogs up 45 to 115 today. As we look to the grain markets, the outsides were really the feature today, with the gold market up over 50. The dollar index down anywhere from 30 to 50 for much of the day. The stock market trading much of the day nearly down 300 points, and the dollar index, as we said earlier, a little weaker, and that transitions right into the grains. The grains tried to hold strength early today. The corn and wheat markets faded a little bit. I think that's a lot of because over the last 6 days we've seen the bean market drop about 30 cents, corn dropping about 13, wheat about 21, and I think the net result here is you've had a lot of short beans, long corn, short beans, long wheat in the days prior. We came in here today and even those up a little bit. So the bean market finds the strength. Corn, which was up 3 to 4 at one point, and wheat, which was up 5 to 7 at one point, both faded as those were the long side of the spreads prior. So to exit those, you had to see the shorts come in and sell. I think that's why you see the even and up today. I think more of that could continue here as you work into the weekend. We need to keep in mind China was off all week this week, so we do anticipate some news out of China here on Tuesday. It's amazing the amount of volatility we've had in the outside markets without China here. It'll be very interesting to see how they react as they come off their holiday week here. Keep in mind, we do not have trade on Monday. We'll be back at it here on Tuesday. Looking at the feeder cattle market down 147. The big feature there is the outside markets. We were down as much as $4 this morning. I think it's great that we battled back. We had cash trade today in the live cattle at 133 in Kansas, 128 to 132 in Nebraska. That weaker tone was, I think, somewhat derivative of the cash. I think there were a little more optimism that we might be able to get up to the 134. But with the fade and futures board today, we saw those bids back off here a little bit. As we look ahead, I do see some resistance kind of setting up here yet in this 134 to 136 area in the nearby lives. As you look out to the deferreds, 122 to 124 in the live cattle, feeder cattle. Anytime you get a shot here in the mid 150s, I think that's a good shot here to get some marketing hedged. The hog market, stronger tone. We're seeing slaughter pace fall off a little bit. Reasonable numbers around, so that's allowing this market to stay somewhat pat here around the key resistance points. I don't think we're going to get much higher in the summer months. Good marketing opportunity, but look for a little more choppy tone and then maybe a little lower progression here as we work into second quarter. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation.